Good morning, good evening, good night, wherever you're watching this transmission. Tis I, Mike Martins. Welcome to a negative mortgage rate program, okay? And it is an old article, but before you switch it off, hear me out, okay? This is kind of important. It's an article from, obviously, Zero Hedge, because they call a spade, and Tyler Durden is the publisher there, or the author. And reporter, whatever you want to call him. Remember, it was Tyler Durden that said, things that you own end up owning you, right? Your possessions. So this article is from 2016, but it's kind of important that we touch on it in 2019, 2020. Now, if you look carefully to the right there, the article has 0 shares. It's almost like nobody cared about it, but I do. We do. Now, let's kick it off with what happened in the United States, and then let's go on to what negative mortgage rate program is. And you guys will be baffled to hear this. A glimpse of the future. In the summer of 2016, U.S. global and economic growth rates are nowhere close to estimates. In fact, a global recession or worse is imminent. At home, student loan defaults are now close to 100%. The unemployment rate is climbing as minimum wage workers finally realize that the financial pain of working or not working is identical. In Euroland, as the weather warms up, the never-ending flotillas from northern Africa resume swamping the southern shores. So what are they talking about? Watch this. Black hole opens up in the world of centrally planned money. Sorry, guys, I got an itch there. By now, the Treasury has long given up on the idea of privatizing the agencies. Freddie and Fannie will soon be part of the HUD, surviving for the sole purpose of providing affordable housing for all, whatever that's supposed to mean. Policymakers have determined that the real estate market is stalling. Desperate times require desperate measures. Something needs to be done. After an intense pow-wow between the administration, Congress, leaders, and Federal Reserve, the Negative Mortgage Rate Program, NMRP, is born. The program is simple. Homeowners will be paid to borrow. The Federal Reserve declares that the NMRP is a brilliant extension to the NIRP, Negative Interest Rate Policy, because it will benefit everyone, not just the 1%ers. Now, how it works. No down payment needed, 100% financing. No payments needed. This is the reverse of a negative amortization loans during a subprime error. In other words, it is negative amortization or negative AM loans, amortization and amortization and term, right? The loan balance will decrease instead of increase. No need for mortgage insurance since with no payments, there can be no defaults. No qualifying needed, hence removing the entire cumbersome of loan application process. So you borrow $100,000 at 1% interest. Here's the math. Your interest will cost you $1,000 per year. In other words, your loan balance will be $99,000 if you make no payments at all. Using a commonly accepted 30-year term, the loan balance at the end of 30 years will be around $50,000. All without borrower having to pay a dime in mortgage expense. In fact, instead charging around the 4% for a mortgage, reverse that to 4% interest in 30 years, the mortgage will be totally extinguished. Freddie and Fannie will originate these loans, packing them in neg-am MBS and sell them to all the Federal Reserve. Housing recovers overnight and the feds declare a mission accomplished. So get out the straitjackets. Okay, guys, you ready for this? Before you call me nuts, this is actually already a reality. Yes, it is, people. And remember, we've been talking about on my channel on Morning Coffee with Mike, and let me get my coffee here. Drink my coffee here with you guys. Thank you, Patreon supporters, for my coffee this morning. And if you want to support this transmission, go ahead on Patreon and donate $1 a month for my coffee. Okay. Before you call me nuts, this is actually already a reality. The governments in Germany, Switzerland, Japan, and others are charging savers for the privilege of lending them money. Well, wait, stop there. Let people enjoy negative interest rates when they buy a house or a car or borrow for college education. In fact, why bother with taxes? Just let the government borrow to operate. The more it borrows, the more it makes. So here it is, the German 2-year government note yield. So we've been talking about Deutsche Bank and all the garbage that's been going on there. And here it is here. Let me see if I can get this to open full. Here it is. Yeah. All right, so now the 2-year German note yield, okay, this 2-year. There's the initial flirtation with negative yields, so that's where it goes. Current yield at minus 0.50%. Wow. Why would you put in your money? That's why American bonds are being more attractive, because they're still offering 1.8% on the 10-year, where on the German 2-year, you're getting less money back. Here's $1 million. Just give me back $900,000. Yeah. Just do that. That's a fantastic idea. Germany's 2-year note yield has been negative since the summer of 2014. Currently, it is at a new low of minus 50 basis points. Click image to enlarge. Watching Mr. Yellen answer questions during the Humphrey Hawkins testimony, the last 2 days was painful. It was time the central banks of the world's in straitjackets and throw them in the cuckoo's nest where they belong. Now, this is a very interesting article, right? And I'll tell you why. Because it ties into this one. Woo! Denmark's third largest bank is now paying people to take out mortgages. Back in 2016, article I just read, with the first negative interest rate bounds for emerged, we offered readers a glimpse of the NIRP future. Okay. Well, for Denmark, the future is now, because 3 years later, with over $15 trillion in negative yielding debt around the world, Denmark's third largest bank is now offering borrowers mortgages at negative interest rates, effectively paying its customers to borrow money for a house purchase. That's how bad it's getting, people. Jyske Bank said this week that customers would now be able to take out a 10-year fixed mortgage rate with an interest rate of 0.5%, meaning that customers will pay back less than the amount they borrowed, or precisely what they said would happen in 2016 preview of the dystopian future. What this means is that if you buy a house for $1 million and pay off your mortgage in the full 10 years, you will pay back only $995,000. No mortgage payments will be due between the purchase and payoff date. So effectively, a borrower only has to repay the principal with small discount guaranteeing the bank loses money on the loan. It's another chapter in the history of the mortgage. Jyske Bank housing economist Michael Holeg told Danish TV, according to Copenhagen Post, a few months ago, we would have said that this would not be possible, but we have surprised time and time again that this opens up a new opportunity for homeowners. In practical terms, the negative interest rate will act as a subsidy to the repayment, and the repayment portion will become smaller and smaller, and the debt is reduced, explained Hogan. How is that possible? Yes, I hardly understand it either. In fact, I said it can't happen, but we have figured out how to have negative rate mortgages, explained Hogan. They explain it right here. Watch these guys talk.
Boligøkonom i Jyske Bank med et fastforrentet lån med negativ rente, altså en minusrente.
Right there. He just said right there. I think he talked about the Ponzi scheme. That said, even with negative rates, banks often charge fees linked to borrowing, which means homeowners could still pay back more. Watch out, front-loaded mortgages! And pay to play, paying for fees and stuff and paperwork and mortgage docs, appraiser, blah, 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 environmental test, Mickey Mouse test, so much. Woo! The insider notes, Jyske Bank's negative rate is the latest in the series of extremely low interest rates from banks of Danish homeowners. That is even more bizarre. However, is the unlike most of its European peers, Denmark's Nationalbanken, Denmark's central bank, has held its main lending rate at a positive 0.05% since January 2015, whereas much of Europe and Switzerland cut their rates to deep negative territory for the past 5 years. And while negative rates on mortgages are only now becoming available to customers, they have been available on short-term mortgage bonds and NIRP since May, according to Bloomberg. It's never been cheaper to borrow. Lis Norfed Brangham, the chief analyst of Nordes Home Financing unit, told Bloomberg. So what happens next? What can we conclude from years ago? We already read that other article. And here we are. The banks are now praising and paying debitors whose loans are automatically repaid while crushing savers who have to suffer the negative interest rates in their deposits. And that's why they want to abolish cash, why they want to get rid of cash. So this way, when they're charging you 1 or 2% to borrow your money, you can't take your money out because it's all digitized, right? As such, the next illogical step is to take the upside-down finance to its extreme and unleash NMRP, i.e. helicopter money, on the population. Because with a record $246 trillion in global debt outstanding, by the way, we owe that $246 trillion to the Decepticons. That's the world debt we're talking. That's world debt. So, I mean, if the Decepticons come to collect, we're screwed. The only way forward is through the grand reset, one which inevitably involves hyperinflating the debt away, and that's the Breenbank presided with the explains how to avoid deflation in his famous 2002 speech. Will require a little helicopter drop of money. Luckily, with negative rates, money is now worthless. So the final lap on the ground race to the bottom currency devaluation should be relatively quick. So guys, this is very important, and again, it only has 3 shares on it. And I strongly recommend you guys to share this kind of stuff. I'm not really on Facebook anymore, but I do share it to minds.com and stuff like that. But I kind of want to tell you guys, this is a big deal because it's coming to America. Europe is always early with stuff. UK was the first. London, when they were competing for foreign investors for foreign money, London was one of the first. Okay, they started that in 2008, 2007, and now London is in a 20-month quarter retraction now. 20 months, like Perth, Australia is in a 20-month retraction right now. Still, 20 quarter retraction. 4, 8, 12, 16, 20. They're all going into their 5th year of retraction. Woo! Guys, don't forget, if you want to support the transmission, you want to buy me a coffee, go ahead on Patreon and support me with $1 a month to support me with my coffee habit. Let me know what you guys think. This is coming. And first things first, step 1. We need to remove cash. India's doing it. Other countries are doing it. Once we can remove cash, then we can start tracking money. You'll see mom and pop business shut down because fruit stands, lemonade stands, farmers markets, all kinds of stuff will start closing down. And they're going to have to get these like biometric fingerprinting for people to pay and blah, blah, blah. But, I mean, come on. It is the way it is headed. So this way, there's no runoff on the banks. They're slowly starting to get rid of bank machines. I made a video about that. And the bank's explanation to that is basically money or managing money, paper money, that's correct, is costing us more than billions of dollars a year to reload bank machines and transport money, count, blah, 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 wrap coins, blah, blah, blah. So the bank's, I guess, excuse to getting rid of money is the cost of operating with money. And then people will buy it in flocks and say, yeah! And then what happens is they start imploding and doing bail-ins and all kinds of crap. That's just, this part is my prediction. This is reality, what's happening here with negative interest rates. Let me know what you guys think in the comments below. Thanks for watching.